Now, British energy company Enquest will start drilling in the North Sea's biggest oil field. Plus, there's some news about Tesco.
There is indeed. Shall we speak to Liam Halligan and all of this economic and business-related news? He's here with us with On the Money. Liam, the high street, well, it's suiting Tesco quite nicely. Record profits, I believe, and also the highest market share for a while.
That's right. We've all been through this cost of living crisis, of course. Inflation still officially is above the Bank of England's 2% target, though there are signs of inflation easing. Yeah, let's just have a look at Tesco's results before we go on to talk about the North Sea. Tesco, of course, is the biggest UK retailer by some way. It has held up its market share, even though some of the discounters like Aldi and Lidl have made hay during this cost of living crisis. Tesco's profits, they were 2.3 billion quid, serious money, £2,300 million during the year to February. And that's up from 882 million the previous year, an increase of around 160%. So profits way more than doubling in a single year. Tesco now saying that they see grocery inflation at a 2-year low. Their figures that have been corroborated also by the British Retail Consortium. They put so-called shop inflation now at just 1.3%. That's an unofficial number during March. We'll see what the official number is from the Office for National Statistics when it comes out next week. But what I would say here is that a lot of listeners and viewers will be thinking, crikey, is Tesco making big profits because prices have been unjustifiably high during the recent period? Britain's biggest retailer denies that, of course, though I suspect a lot of GB News viewers and listeners will be very impatient now at the prices they're paying in supermarkets, and they'll be looking for price rises not just to slow down, but prices to actually fall in the months to come. We shall see.
Liam, just quickly on the Tesco story before we move on to the oil and gas. Could this be because they were the first to get this club card? It's proven very popular indeed, bringing in the punters.
Well, the Tesco Club Card, if you go to Harvard Business School and do a sort of management degree, the Tesco Club Card is a very long-standing example, sort of corporate success story. It was an innovation back in the day. It's been around for many, many years now. It's been mimicked across the world, and certainly it has really drawn the customers into Tesco. And as I say, this is a company that employs 330,000 people. It's an absolute runaway success, named after Tessa Cohen, of course, founded in Hackney in East London. I used to live right next door to the first ever Tesco. Tessa Cohen was the wife of the founder of this incredible retailer, and it's making huge amounts of cash.
Wish I'd bought some shares in the old Tesco.
Yeah,
would have done quite nicely.
It tried to expand into America, and that did not go well. It tried to open shops called Fresh and Easy with a very annoying and repetitive advert in 2013 or something, and that was not a success. But over here, my goodness. But Liam, we should move on to oil and gas. What on earth is going on in the North Sea?
This is a really interesting story, and I know both of you have been following this debate very, very closely as well. Look, the North Sea is still a very, very important source of oil and gas, not just for the UK, but indeed for Europe. Let's have a look at some of the numbers. It is quite astonishing. There are around 300 active gas and oil fields in the North Sea still, but over half are due to cease production because they just expire by 2030, so for the next 5 or 6 years or so. The North Sea, it provides 83% of the oil that we use each year and 54% of the gas. We are a net energy importer in the UK, but we're still a significant producer in our own right. And guess what? Despite everything you hear about net zero, oil and gas combined, when you include transport, account for 75% of all energy that we use. And that is not shifting much any soon. Even by 2050, according to the Climate Change Commission, the government's kind of in-house conscience on green issues, we're looking at 25 to 30% of our energy being oil and gas by 2050, when we're meant to be at net zero carbon emissions. But look, the news today is that a British company, Enquest, has said it is going to start drilling at one of the biggest North Sea oil fields discovered in the last 20 years, despite the kind of quite hostile regulatory environment. The Tories, of course, have extended the windfall tax. Oil and gas companies in the North Sea, they used to pay 30% of their profits in tax. It's now 75%, and Labour say they want to introduce a proper windfall tax. So, what's that, 80%, 90%? But despite these headwinds, if you like, despite the fact that Labour say they're going to stop all new oil and gas drilling if and when they come to government, EnQuest are pressing ahead. This new site is 80 miles east of Shetland, which is relatively close in when it comes to the North Sea. It could provide up to 500 million barrels of oil during its lifetime. And how much is that? Well, the UK uses 1.5 million barrels in its own right every day. So it's a significantly chunky oil field. I think, finally, we are going to see both Tories and Labour easing up when it comes to the North Sea and allowing a lot more drilling of both oil and gas than they say that they currently are.
Very interesting indeed, because, of course, people in the industry have been very worried about the tax regime, the regulatory regime, but they're still going. They're still going for it, taking the risk. Thank you very much indeed, Liam Halligan, our economics and business editor.